This is the briefing for Friday, October 21st. It's been quite a week in the stock indices. I want to kind of go back to, I think it was last weekend's briefing, and I talked about the fact that it looked like, I think this was last Friday, the 14th. This was last Friday's, a week ago, trading. And it appeared that the Thursday rally we had, that strong rally we had, and then we retraced about 50%. It appeared that it was something in the context of the potentially a three-step counter-trend rotation. I want to switch to the daily chart here. And I talked about the fact that this was a series of lower highs and lower lows, and that potentially, as long as this high right here wasn't taken out, that the downtrend was still intact. And that's basically what happened for the rest of the week. We got an area of rotation, and I projected that the spiders would reach where equality, where the first leg is equal to the third leg, right in the 378 area. And I think this high came in right at 375.45. And in the Qs, I projected it to come in at 277, and this high came in right at 277.21. So I hit it pretty close in terms of those numbers. Now, those numbers aren't exact. They're supposed to be an area that we watch for. And it was just luck that it came in at 277.21 when my calculation was 277. But anyway, I've been watching what's been happening with the market for this week, and this has been a tough time to trade, mainly because we've had to trade for most of the week within a trading range of in the spiders of about 6 points, 366 up to 372, then back down, then back up, then back down, then back up again. Now today we had something a little bit different. In today's trading, it appeared that we were going to take out this low and potentially start another rotation back to the downside. But buying came in almost immediately right after the open and drove the market back up through 366, which was support. And then the rest of the day, we had this slow grind higher, even taking out the 372 area. So strategically, what I have to do is try to develop a strategy for Monday's trading. Now that we've broken out to the upside outside of this area of pause, and the same thing in the NASDAQ, the important aspect here is what is the next degree of time happening here? What strategy is developing here? Now, one of the possibilities that I looked at is that we talked about this being a three-step counter-trend rotation, and it certainly was, where this was about 50%. And then, of course, we got the next leg up, which was almost equal to the first leg. Now, sometimes these develop into a more complex counter trend rotation where you get a first leg, second leg, and a third leg, but in a greater degree time frame, this is one leg. This would be the second leg, which retraced about 50% of this move. And then, of course, we're looking at the potential for a third leg that started in today's trading. Same thing in the Qs. Now, I did the calculations based on this, and in the spiders, it would project the third leg to end right around the 390, 391 area, and in the Qs, it would project it to end about the 290 area. So let's look at the longer term chart. So here's the 380 area. That's this last lower high. 390 is this important resistance right through here. So the possibility next week that we're going to see higher prices certainly is there. The next level of important resistance short term would be 380, which is this high, and then above that is going to be 390, which would be equality for this being the first leg, the second leg, and then the third leg coming in right around the 390 area. Now you can see also volume in the spiders ticked up slightly, as you can see in today's trading. Breadth expanded, but didn't expand dramatically. And you know, when you get a rally off of a bottom like this, and we really did have an area of rotation for the last 3 to 4 days of trading, you really don't want volume to come in all at one time. You want to see it kind of build as it moves higher. So certainly the possibility in one strategy is going to be that we're going to see higher prices the first part of the week, and potential resistance in the spider short term is 380, and intermediate term is going to be 390. In the NASDAQ, it's basically the same situation. You've got a 1, a 2, potentially a 3. 280 is the first level of resistance. Above that is going to be the 284 area, and then where equality happens is right at 290, right about this level right through here. So it's a little bit different in the Qs. Volume in the Qs ticked up nicely today. Today was a fairly strong day. Breadth ticked up nicely also, and once again, we don't want to see the internals strengthen all in one day or one trading day. We want to see them build on each other, because that suggests that, one, there's participation and it's attracting more buyers through volume, and it's broad-based because more and more shares are beginning to trade higher as opposed to lower. So one strategy potential for the coming week is that if we trade much above 280 in the Qs, and if we trade much above 380 in the spiders, then that's going to suggest the strategy of a three-step counter trend rotation, where that would make this a trend to the downside, this a counter trend to this, and then the potential for another leg to the downside would certainly be there. We just have to analyze the internals as we reach that level. Now, as we closed in today's trading, I think that as I faced the first part of the week, I think that's probably the higher probability in terms of strategy development. So I'm going to be looking to be long, and then of course I want to see what happens as we reach 380. If 380 holds, then we're basically in a greater degree time frame counter trend rotation, and we're going to see another rotation back to the downside. Alternatively, if we trade back through 274, which we traded above it here, we traded slightly above it right here, and in the Qs, same thing in the spiders. If we trade back through 274, that's going to suggest rotation back through this range. Trading back through 372 in the spiders is going to suggest rotation back through this range, and we're back into 4 or 5 days of rotation. This would be a false breakout, and we're going to potentially rotate back through this range again. So strategically, we have two strategies set up. What's going to be important is if we trade above today's high on Monday, you certainly don't want to see a divergence in breadth. You want to see breadth stronger than it was in today's trading. And here's your breadth readings right here: 1284 in the NYSE, 1562 in the NASDAQ. And we certainly would want to see volume continuing to build and to increase as well. In terms of the overbought and oversold condition of the market, you can see that we are not quite overbought in the NYSE, nor are we overbought in the NASDAQ. So this does allow for the continuation of the move that we saw in today's trading. Now, it doesn't mean that we're going to go straight up there to the 290 area, the 390 area in the spiders, but we will get a series of runs and pauses. So watch for that also as it occurs. So important is going to be support now is 372 in the spiders and 274 in the Qs, and then below that is 366 in the spiders and 268 in the Qs. Going to be a really important week next week. Have a great weekend. I'll pick this back up again on Monday.